All right, everybody, welcome back to another video here on Financial Friends. You have just tuned in to another episode of The Dividend Journey. The Dividend Journey is where I track a dividend portfolio here on YouTube for you all to see, documenting my journey, as it's called The Dividend Journey, along the way, talking to you about different topics that relate to dividend stocks. Today, we're going to be talking about beta. I think it's pretty fitting considering the absolute ups and downs we are seeing in the stock market today. The beta does have to do with stocks volatility, so stick around for that. If you're new to Financial Friends, again, thank you for joining me. If you want to join the friend group, a community of people who love business, finance, and investing, definitely hit the subscribe button to join that. And real quick, before we get into the topic of today's video, hit that like button, smash that like button down below. It's free, it takes just a second. You would have already been done with it if you already did it, and it helps support the channel and push this video to more people. So let's go ahead and talk about beta super quick, and I will get you guys on your merry way. So what is beta? Why do we care about it? Let's go ahead and visualize it. All of those things we're going to talk about right here, right now. So my portfolio here on the Dividend Journey has a relatively low beta. Why? Why do I have a low beta? Why do I care about beta? Why am I talking about it? Well, first, we need the book definition. That is first things first. The book definition, the boring definition of beta, it is a measure of a stock's volatility in relation to the entire market or the overall market. The overall market in this instance is the S&P 500 index, the top 500 largest companies within the United States. That is a peg. We're going to peg that as a 1. The S&P 500 has a beta of 1. So a stock that swings more than the S&P 500 up or down will obviously have a beta of more than 1. And if a stock doesn't swing quite as high, doesn't swing quite as low, it will have a beta of less than 1. Now this little graph that I have here, if you want to screenshot this, take a quick look at it. If it just makes more sense to you, definitely go ahead and look at it. But 0 to 1 is going to have lower volatility. That's what we just mentioned. It's not going to have high highs or low lows. It's going to stay a little bit flatter. If it is 1, well, that means it moved the exact same amount on any given day as the S&P 500. It is just like it. It is a 1. And if it's above 1, it moved higher or lower than the S&P 500. So the companies that I have in my portfolio, like Apple and John Deere, have betas a little bit higher than that 1 mark. They're going to be down here on the right-hand side, a 1.22, obviously moving a little bit more than the S&P, and then John Deere has a 1.02, again, moving just a slight hair more than the S&P. Now, we have Hershey with a super low beta of 0.38. We have J&J with, again, another low beta of 0.66. We have 3M with a beta under 1 coming in at 0.88. We have O, Realty Income Corp, coming in with a beta of 0.74. And then we have Waste Management, which I'm going to use in just a moment to make a comparison, with a beta of 0.81. And the Google search I'm going to be using, sneak peek, has it pegged at a 0.79. Both relatively the same there. So why did I just talk about that? We have built this portfolio on low risk, low volatility, and stability. That's what this portfolio, the Dividend Journey portfolio, is built on. That's its foundation. We want to bring in cash via dividends, and we don't want our stocks to be swinging all over the place. We want to be relatively predictable, low, stable, low beta. So that's why I've kind of highlighted this in this video, because I think it's important as the market moves all types of different directions. We could see here today the market up 1.86%, 1.98%, or 1.59%, depending on the index that you're using to kind of measure it. This portfolio did not move that much. Again, it doesn't have those swings. Actually, I could take a look. It moved 1.42% today up. So positive 1.42% swing. What does that mean? It has a lower volatility than the market, a lower beta, a beta under 1. Now, to make an actual visualization of this, we have the S&P 500 and Waste Management. Waste Management right here, you could see in the yellow, did not move quite as much as the S&P 500. Actually, it stayed above the S&P 500 in this instance, moving not quite as much, not as low of lows here. And then we could take a look at Best Buy, a company with a 1.43 beta, moving way more than the S&P 500. Absolutely super easy to be able to tell here. You have Best Buy in the yellow, diving, and the S&P kind of staying relatively stable at that 1.43 beta. It's going to have lower lows, and it does have lower lows. So hopefully you're able to kind of visualize and see everything I'm talking about there. Now, in relation to my actual portfolio, this is my actual portfolio. I can play this video for you here, showing you that my portfolio has continued to grow. Now, yes, I have been making additions to the portfolio, growing it slowly over time, adding more cash to it slowly over time, but it does not have too much volatility. There's not any sustained downward or really upward movement other than me continually adding more to the portfolio. So that's really all I have for you guys today. Hopefully you're able to kind of see what I'm talking about in terms of beta. Hope that you learned something new. If you did, hit that like button down below, and I will see you all in the next one. Take care.